move on to a corporate conversation. InfoEdge is under pressure. They came out with numbers yesterday, and yesterday too, the stock was down about 1.5%. The company's revenue growth has come in at 7% on a year-on-year basis, and on a quarter-on-quarter basis, we've seen the revenues for the company absolutely flat. The top line of the company, as I said, is up 7%, and that is driven by a 3% increase in the company's flagship, their core business of Naukri. So there's just been about a 3% growth in Naukri, and that's on account of weak IT hiring. But this is offset by strong growth of more than 20% in its other verticals, like 99 Acres, which owns real estate, Jeevan Sathi, and even Shiksha. To talk about the way forward, we have the MD and CEO, Hitesh Oberoi, to take some questions for us. Hitesh, morning, and thank you for joining in. This is Reema here. So first, give us an indication of how this quarter is likely to be. Naukri has been. We've seen the numbers for Q3. IT continues to remain subdued. How long do you expect that? What are companies telling you? When should we start expecting that IT hiring will pick up? And if you could break up Naukri's 3% top line growth in terms of IT hiring revenue growth and the non-IT hiring revenue growth.
No, I wish I could predict when hiring will pick up. Of course, what we are hearing from our clients is that utilization rates are up. They had hired extra manpower last year. Demand was soft for a while, and now utilization rates are at pre-COVID levels. But attrition rates at IT companies continue to be low. In fact, they are lower than what they were pre-COVID for a lot of our clients. So one can't be sure as to when demand will pick up. And as soon as demand picks up, given that utilization rates are high, business should bounce back. But whether it'll take a quarter or two is hard for me to say. As far as we are concerned, about half our business is perhaps indexed to IT hiring, because we get a lot of revenue from IT companies and we get a lot of revenue from recruitment firms who also actually work for IT companies in many cases. And, our overall Naukri business revenue grew at 3%. Our billings were at -1%. If I were to break it up for you, the non-IT business perhaps grew at 8-10%, while the IT business and the consulting business, recruitment business was down 7-8%. So that's the broad sort of broadly what we are seeing. Now, of course, within non-IT also, certain sectors did better than other sectors. Sectors like banking, financial service, insurance, sectors like healthcare, sectors like construction and engineering and real estate and travel, tourism, hospitality did better than sectors like durables or FMCG or pharmaceuticals and others. When will IT hiring come back? It's $1 million question.
Yeah, we keep putting that to a lot of the IT companies themselves, and every time Reema goes out to talk to them, I think that's top of mind, Hitesh. Good to have you on the show. So let's talk about happier things, and that is, of course, the real estate business, because that continues to fire away. The growth trends are, in the low 20s right now. What is the sense that you get here, given that we are in a bit of an upcycle from what it looks like? What can we expect from that business in terms of better revenue visibility, and how do you expect the margin profile to be over the next quarter or so?
So our 99 Acres team has been executing well for the last 6-7 quarters now. For I think about 7-8 quarters now, business has been growing at more than 20% year on year. And of course, what is helping is the fact that the real estate market is looking good. After years of being in their sort of doldrums, because of GST, RERA, demonetization, COVID, finally real estate is back. Real estate prices are up almost everywhere in the country. In some parts of the country, prices are up 30%, but there are parts of the country where prices are up 130% as well. And new launch inventory, unsold inventory of basically homes and real estate is at a decadal low. So therefore there is on the one hand, there is more demand after COVID, and on the other hand, there is less supply, and which is what is creating this pressure on prices. And we suspect this is likely to continue for some more time, because real estate cycles are normally long and deep. So when real estate goes up, it stays up for a long time, and it goes down for a long time. And this is what is helping our 99 Acres business. Now, of course, combine this with good execution at our end, and the fact that our kind of businesses have high operating leverage. So we were this year, for example, we've grown our revenue by 22%. In the first 9 months, our costs are up only 5-6%, right? So, so as a result of which our burn is down substantially for the first 9 months of this year in real estate. And if this continues, then of course, we don't expect costs to go up substantially next year as well, as long as the market is buoyant and we continue to execute well.
So break even for 99 Acres in sight in 24 itself, or maybe 25? I mean, this is a real estate upcycle. I guess this is the best time to break even in this sort of a business, no?
No, you're right. I mean, if we continue to execute well, we could break even. Now the question then will be, do we want to break even, or do we want to continue investing in the business to grow it even faster and to gain share in markets where we are weak? See, it's not a market where we are a dominant player like in Naukri. In Naukri, we have 70-80% market share everywhere. Here, our market share is more like 40%. We are a leader, but so from a strategic standpoint, we may continue to invest in this business for some more time to try and gain share.
Got it. Getting back to the Naukri business, can you break up the revenue growth in terms of the increase in the paid subscribers and even if there was an increase in the realizations? And what is the outlook on that going ahead?
So I'll tell you how these markets work. In a good market, you can take price increases, you get new customers, your customers upgrade. So it's a little cyclical in that sense. So in a market like this, our ability to take price increases is muted. So you can assume that there's zero price increase. And, if you're growing at 1% or 2%, it's all because of mostly, volume increases are also negligible. It's because we've added some new customers in the non-IT segments.
Okay. Hitesh, what plans as you close out the year? Just give us some idea of, cash levels and how you're looking at investment strategies. I mean, you've had this sort of, string of investments that you've made, strategic investments, rather financial investments in a lot of companies. Can we expect any more before the year closes out? And what the plans will be overall in terms of, the balance sheet and cash?
Yeah, so the company continues to generate a lot of cash. I mean, we generate close to 1,000 crores of cash every year. And we have a very active, of course, we are investing in our internal businesses that remains, these businesses remain our number one priority. Businesses like Jeevan Sathi, 99acres, Shiksha, and Naukri. We are sort of experimenting with the blue collar job board, Job Hai. We are now scaling it up it's now in 30 cities. So, internal business is always priority one, but we also have an active, financial investing program. We have made some balance sheet investments, and now we have an AIF. So the AIF has been investing. We've made over 70, 80 investments in startups over the last few years. And the markets now for investing are more rational and reasonable. So you're getting reasonable valuations because there's been a correction. So that program will continue. And these, that is like a separate sort of fund, and they have their own dynamics, and they keep investing. And so that is not going to stop. Now, as a company, of course, we are constantly looking for M&A opportunities as well. We've done a lot of small ticket acquisitions over the last few years, and we've successfully integrated those. And we continue to look for those opportunities too.
Anything immediate on the horizon, near term? Anything you're liking, talking, thinking, discussing?
Nothing meaningful at this stage.
Okay.
All right. We'll leave the conversation here. Hitesh, thank you very much for joining in. On that note, we'll slip into a very short break. On the